Well, it's yet another episode of the Crypto Radar podcast, and I'm Saul Paul. That's Nevada Darren, as sometimes he likes to be called. Have you noted, Darren, last week, Bloomberg, of all publications, has given Bitcoin its glowing endorsement after a decade-long wait it took for the, if we call him Bloomberg the premier financial news publication in the world, maybe not. Anyway, Bloomberg suggests Bitcoin is preparing for a massive bull run. What they've called it is the Bitcoin maturation leap. So they're saying that Bitcoin, and I guess by default, as a consequence, the entire crypto ecosystem is maturing, or is about to leap into maturity, according to the old Michael Bloomberg and his outlet. They've given it. They've spelled out a number of reasons. They say that Bitcoin and gold are two of the primary beneficiaries of this stimulus that's going on worldwide, and they also think that Bitcoin is beginning to transition from a speculative asset to a hedge asset. They have pointed out that they think that 2020, as our friend Mike Novogratz has said, 2020 is the year that, as in their words, marks a key test for Bitcoin's transition toward a quasi-currency like gold, and here's the news, here's the kicker, we expect it to pass. This is from Bloomberg, which, has a history of talking about cryptocurrencies being,
talking trash.
Yeah, absolutely. So it was a massive about face from, an established outlet. I found it quite interesting that they'd gone to that length. I mean, and it wasn't just, we think Bitcoin's okay. They're saying this is it. This year is the year of Bitcoin. This year is a year of crypto maturity.
Did they make any predictions numbers-wise?
No, they talked about a couple of indicators pointing to numbers, but they didn't themselves suggest. They referred to the 2017 bull run. They just referenced it, but no predictions in terms of actual numbers. But they did say it's undervalued, relative to on-chain metrics. Yeah, I thought it was quite interesting that they'd changed their tune, so to speak.
Feels like a bearish signal to me. Kind of like when CNBC says, "All right, guys, it's time to buy Bitcoin," or weren't they the ones who said buy Ripple? How to buy Ripple when it was $3.50 or something like that?
I know.
When you see CNBC say something positive about Bitcoin, it pretty much consistently drops. When you see Peter Schiff bragging about how bad Bitcoin's doing, it's pretty much the perfect time to buy it. This is not financial advice. I don't know about Bloomberg. I've never looked into their patterns, but that's interesting.
They've been traditionally quite skeptical. Call them skeptics. Yeah.
Sure.
Yeah.
Establishment.
Yeah. And balanced, but on the skeptical side of the ledger, right?
Which isn't necessarily a bad thing.
No, it's not a bad thing. We need bearish and bullish voices in the industry, like every other industry, and Bloomberg's traditionally been a bearish or skeptical one. So this was quite a change in tune. It means absolutely nothing, but it is noteworthy.
Well, slowly then suddenly is what they say, right? Slowly then suddenly. It's kind of a gradual thing, and then all of a sudden a few big entities go, "Wait a minute, we've got something here," and who knows what happens, right?
Right. Exactly.
The story I was looking at this week was about the theoretical problem of circuit breakers and how that's used in the legacy stock market system in order to prevent huge losses on any given day. Where what happens is that if there is a big drop in stocks, there's a circuit broken, which essentially is the idea that trading stops temporarily, allows people to kind of catch their breath, and allows the market to be liquid enough that you don't see a huge drop. And there was a piece on Cointelegraph by let me check his name a second, Kyle White, that I thought was really an interesting piece and was well written about the problem in the crypto industry, about the notion of circuit breakers. And when I look at that, there were a few points that came up. It traces back to March 12 when BitMEX basically had a collapse in the price. And they didn't use a circuit breaker per se, but in effect, that's what happened. They basically froze.
It ended up being a circuit breaker. So what were you saying? Is the argument pro circuit breaker? Crypto needs a circuit breaker?
Well, there's two sides to it, right? There are arguments saying that it's maybe something that needs to be looked at, but the problem being that in the legacy stock markets, you don't have the kind of decentralization that you do in crypto, where if you were to impose that on one exchange, well, there's going to be many, many, many other exchanges that will not have that same circuit breaker. So you're going to be arbitraging. You're going to have all kinds of problems with decentralized trading that you cannot possibly impose circuit breakers in the same way.
It would absolutely be the perfect opportunity for one exchange to buck the system and allow traders to jump in while everything else is shut down and breach the circuit breakers, essentially, if they tried to do that.
Well, and in my opinion, it works better not having them. You did have a crisis for a day where prices fell precipitously. But if you look back at that just all that happened in the traditional markets is it just bled out for a period of time because of the circuit breakers. But in the end, the stocks got to the same point. They just took longer to get there. Bitcoin had the single day crash, and since that point, it was recovering. So in the legacy system, you slowed the bleeding, it still bled out, and then started to make its recovery. Whereas in crypto, it just went down, over and done with, and since then it's been recovering to the point that we're now ahead of stocks in terms of recovery.
I think so. If my memory recalls, the circuit breaker was introduced post the '87 crash, and its intention was to battle the problem with automated trading. So price triggers would trigger robots who would sell, and then that would trigger more selling. It was intended to stop that, and I think it suffered from a little bit of mission creep over the years, such that any time that there's any precipitous drop in stocks, there will be trading halts, allowing people to, as you said, catch their breaths. I'm not sure it was designed to do that, although now that's what it does. That's what it is there for. Yeah.
Right. And to me, it comes back to the idea that volatility in crypto markets is a feature, not a flaw. And a lot of people look at it from the traditional markets and go, this is a huge problem. And those of us who are into crypto markets go, no. This is the feature that makes this unique and interesting, and it makes it a unique entity. So to me, I don't see us getting to a point where we have circuit breakers unless there's some kind of monopoly or duopoly in the system where you only have a couple exchanges running the show. And that's just not possible. When you look at options like atomic swaps, for example, which are becoming more and more available. Yes, they're not used heavily yet, but there are atomic swap exchanges out there that I can go on and trade at any time with any peer anywhere with no one stopping it. So I don't see it happening. But it was an interesting piece. It brought up some interesting arguments. That was Crypto Industry Divided Over Introducing Circuit Breakers on Exchanges by Kyle White.
Yeah, no, I can't say it. I mean, I think it's not a good idea, primarily because it's not workable. It's not feasible in the industry. I think it's also not a good idea anyway, because you get mission creep. I was actually quite, we're all crypto fans here, and we always like to say this sort of thing, but there was a new macro report, according to William Suberg from Cointelegraph, that forecasts $1 million prices for Bitcoin by 2025, $1 million.
So what would the market cap of BTC be at that point? Like $7 trillion or something? It'd be as much as gold, would it not?
I actually didn't do those. What is it? 18 million times a million, right? A million. What is that?
I don't know.
1.8.
I don't want to make some stupid math error here on
Yeah.
the
Okay.
podcast.
A lot.
I was under the impression that for it to be $1 million Bitcoin, you're talking a similar amount of market cap as gold.
No. Okay, here it is. We're talking about the leap from a $200 billion asset class to a $10 trillion asset.
Okay, so
class.
more than gold.
Is that more than gold?
Yeah.
Right. Okay. There you go. I mean, that makes sense. To me, it makes sense. The $1 million figure, I don't really care. I don't care too much for these predictive figures, right? I think they're there for, the people who click on the story. Yeah. But the idea that Bitcoin would become a not that kind of fantasizing. That's not what we mean. But the idea that Bitcoin should be a larger asset class than gold makes sense to me.
It does make sense. I actually saw a piece just the other day about a bunch of gold bars being flown over from one place to another to secure, I forget what it was, but it was to secure some gold. And, okay, granted, gold is very heavy. And so $1 million worth of gold actually doesn't occupy a whole lot of space. You might think it takes up a lot of space. It doesn't. It's, smaller than a space the size of your couch, right? Because they're a very dense material, right? Having said that, you need all kinds of security. You need all kinds of things in place. Shipping it is extremely costly, right? Same day that I saw that story, someone moved $368 million worth of Bitcoin from one address to another. We don't know who, for a fee of 63 cents.
Yeah.
Now, you're telling me that doesn't have a value to it, that utility?
No, I mean, yeah, you're preaching to the converted here. I mean, it's obvious to me. It's obvious to you. I don't know why. I really still don't know why it's not obvious to everybody, other than user friendliness, I guess, is the
right. And people get hung up on this. Oh, but it's just virtual. It's not a real thing. It's like, as long as both sides agree to trade it at this value, it has that value. Nothing else matters.
Yep, I'm with you, man. It's no more or less virtual than fiat currency, really, at the end of the day.
I'd say it's more real than fiat by a long shot.
Well, there you go. Then we're on now. Stock up on Bitcoin, everybody. It's coming towards $1 million. Not financial advice. I didn't say that. Who'd you interview this week, Darren?
It was Dr. Lehman Baird from Hedera Hash Graph, and the guy
are they the Libra that's not Libra? The good Libra, white hat Libra.
You could say that. They're using a system that kind of goes beyond blockchain, though. It's very fascinating. It's the way he explained it to me was, if you had a message that I sent to you and I knew your last message, and you could use those two messages, like if I knew your last message and I knew my own last message, and I could take those pieces and get everyone in the world to share their messages in relation to each other, you could then kind of compile all those messages in like a graph-like relationship, as opposed to a blockchain, through basically gossip about gossip, basily talking to your peers. It got very complicated, very mathematically complicated.
Just tell me about it. The dumb side of my brain, I think, just exploded. The other side had a stroke.
You okay?
Yeah, I'm still here. I think.
Even when he tried to dumb it down for me, I'll admit I was still like, I don't totally understand this.
Right.
Right. And he's like, oh, yeah, and it's just simple math. You just do the math in your head. I'm like, in your head? Okay. Not in my head. Right? So the guy is amazing. He's a prof. He was a prof at Air Force Academy, and he's a scientist there, did a lot of research there, but he also started companies there. It's a very interesting story. So that's in Cointelegraph magazine.
It sounds absolutely fascinating, Darren. I'm not sure that I entirely understand it. I guess I'm going to have to go to Cointelegraph magazine and it'll be made clearer for me.
I think so. I mean, I didn't focus on the technicalities of it. The story is more about his life, right?
Right.
His journey, and it's a fascinating journey. It's a very interesting story.
Awesome.
Yeah.
Nice work. Speaking of nice work, and that how was that for a seamless transition?
Nice.
And this was, I mean, I think, crypto is shameless in many ways. We go where the money goes. If you can exploit, if you can abuse and exploit in a DeFi protocol, you will. There's nothing wrong with doing that. We will do that. But what I thought was really lovely during the week was the crypto versus COVID poker tournament, of which I believe there's been 2 nights. One of the chief organizers, Chris Spadafora, and I'm sorry, Chris, if I've butchered the pronunciation of your name. Chris Spadafora and a couple of others organized it. He actually won the first round.
Right.
So it was everyone chipped in $100 to play. They gave most of that money away to charities to help deal with to help fight COVID, and the winner took. So Chris won, I think it was $5,800. He then donated that on to those charities, and Charlie Lee, who everyone thought may have been a little bit of a lightweight when it came to poker. Little joke in there. He won the second round and also chose to donate his winnings to the cause. And I think this is a nice moment. It was the entire thing, the fact that they organized it, they did it, and then not only that, they didn't even take their winnings, but they gave it.
Right.
They gave it away to help fight the cause. I thought was great. I wrote about that in my Epic Fail versus Nailed It column for Saturday, and yeah, it's nice to hear those stories. I like this. There is humanity in the sector. We need to remember that, I think.
Yeah, that was awesome. Now, you also talked about an epic fail. Did you want to share about that?
We did. It was we employed sarcasm in the article.
Mm-hmm.
So Jimmy,
which is easier to convey in a podcast.
It is easier to convey in a podcast.
In writing.
Well, we had to say that we deployed sarcasm, actually, just in case people got confused.
See, that's what Trump should have done when he talked about injecting disinfectant. If he would have just said, "I'm being sarcastic."
Everybody, I am being sarcastic, and then deliver the thing. If indeed,
I don't know, something with a hand wave or something. I don't know.
The climate and state lawyers are trying to serve Jimmy Nguyen with a subpoena. They want him to appear in the court case, the Wright versus Climate and State court case going on in Florida.
Now, why does he need to appear?
Yeah, well, that's another question. That he is unlikely to have anything to offer whatsoever. He came onto the scene way too late, right? So, but he's a wanted man, but he's also, everybody knows where he is all the time. His message to them was, Google me. They waited 2 years to try and serve him, and I'm not trying to take sides here either way, right? But I figured Satoshi needs his day in court, and the longer this thing drags on, Satoshi will not be able to prove that he is Satoshi. So Jimmy Nguyen needs to make himself available to receive this subpoena, and going to conferences and speaking in person is apparently not good enough for this law firm. Telling everybody where he is at all times is apparently not good enough for this law firm. He's being treated like a wanted criminal, and the fact is he hasn't really got anything to say about matters whatsoever. There's nothing he could offer. So
right, I mean, it comes down to a few tweets where he argued with him. Basically, is that all it is? Like, what are they subpoenaing? What's the subpoena justified by?
They feel that he could offer evidence as to whether, in fact, Wright owes the Climate Estate half of his 1.1 million Bitcoin.
Which he doesn't have.
There's a 4-year gap, it looks like to me, and I think everybody knows that. But they've 6 times they've tried to serve. Well, they claim to have tried to serve him 6 times. Courts have found they failed to try to serve him 6 times. But yeah, we wrote a nice sarcastic piece about Jimmy Nguyen being a subpoena ducking wanted fugitive. How did we do last week?
Fail.
In our definitely not financial advice.
Definitely not financial advice. I think we both lost our bets. We each won against the other person's prediction, is I think what happened. Maybe we should add more suspense by not having me say that first. I don't know. But I know for myself, I predicted a bearish condition for Bitcoin. It was currently at that point, I think the price was $7,179, if I remember correctly. And
That's a hell of a
61
memory.
cents or something. I'd have to check the podcast. Anyway, today, right now, as I look on CoinMarketCap, let me refresh it. It's $7,602.87. So it's gone up about $400. You win. Round one goes to Paul.
Bang.
5% increase. You were predicting 8. It's had a little bit of resistance when it's come up against the 7,800 point mark, which has been traditionally very, very, very strong resistance in the history of Bitcoin. There's very few occasions where it's broken past that mark.
Well, we have a technical analyst between us.
So, yeah. And I don't know. I'm not going to make any predictions on it this week. That I got burned on the last one. And then you had the DeFi. Do you want to talk about the lock DeFi?
Yeah, I said that the D-Force exploit that was taken advantage of, and later the dude repaid it for some.
Yeah, that was interesting.
Wasn't it? Yeah, I know. I wouldn't have, to be honest.
Hacker, yeah. Well, apparently there was some people that traced his identity somehow. I think he saw that he was a little compromised, and he thought, okay, I'm just going to say, oh, this was just a white hat thing. I'm being nice. But that's just what I've read.
Right. Okay. That would explain it. I said there would be what I predicted for DeFi, given the D-Force exploit, was a flight from that subsector, a significant flight. So it was what was it, about $800 million?
$750 million.
750. And I predicted half of that would be gone within a week. And I was clearly
prediction
wrong.
Very bold.
It was a prediction. I like to make bold predictions.
It's actually increased since then.
Yeah. So as for totally getting something wrong, there I am. Freely admitted, I'm one down. So I'm one up, one down, right? We're one each.
We both are. So we can't really brag too much because we're both in the same place.
Right.
And it just goes to show you this is definitely not financial advice.
Definitely not. In fact, it's probably the opposite.
It's the opposite
of financial. Yeah.
All right. So for this episode, definitely not financial advice. So that score is 1 for each of us. Yeah, we're even. We're 1 and 1.
One apiece.
So what I was thinking about for this week's story was the Federal Reserve is meeting. They're meeting on Tuesday, wrapping up on Wednesday, and then they normally make an announcement at the end of the meetings on the Wednesday. Jerome Powell. And as it stands, last meeting, they set their target for the federal funds rate. They hit 0% to 0.25%. That was back in March. And now they're meeting again. And my prediction for this Wednesday is, for the first time in American history, we are going to see the Federal Reserve go negative. My prediction, a range from 0 to negative 0.25%, upon which the news of that will cause gold, stocks, and Bitcoin to rally. I think we're going to see a little cooling off Monday, Tuesday here with crypto because of this impending news. And when that gets announced, it's going to go ballistic.
So the risk on and the hedges are all gonna rise as a result of your prediction of negative interest rates for the first time.
I think we're going negative. We've been in the crypto world. We've been calling it for years. I think this is the time it happens. What do you think? Negative, or is it just going to stay where it is? Or I don't think they're going to raise it, but you could call that for your prediction. What's your prediction?
My prediction is that Jerome Powell will come down with a bad case of COVID-19 on Tuesday.
Ooh.
And they will delay their meetings and their announcement by 2 weeks.
You're not even committing to a number. You're just saying you're going to postpone.
I'm saying that, yes.
Really?
Do you want me to? Do you really want me to? Do you want me to go bold?
You've got to get some kind of. You're getting like more Tron or whatever for that deal. Like, is that putting out 100 million Tron or something that you're gonna? Or I forget what number it was, gazillion or something.
Yeah.
3 cents. Getting 3 cents on this bet.
3 cents. What do I have to? Do I have to shoot something? I mean, okay. No, I think they'll hold.
Range is 0 to negative 0.25. It's currently 0 to 0.25.
Okay, I'm going to go that they hold. They hold in positive territory.
Okay.
We have to take
All
an
right.
opposite.
And how
position.
about for you? What's your DNFA?
So my DNFA, definitely not financial advice, is that the newly released Daedalus wallet from Cardano will take.
I've always said Daedalus.
I say, hey, yeah. I've been baffled by how I look at the word and think to myself, how on earth am I going to say this?
The only reason I say that pronunciation is from the cartoon Hercules show from the 80s. You know, the guy with little Newton, the centaur dude, and he'd be like, hey, Herc, it's Daedalus. And then
Well,
Hercules
you have a context then.
Yeah.
Okay. Well, I lack that context. So, well, my prediction is that. So the Daedalus wallet, which has just released version 1.0. How old's Cardano?
Is
Almost
this
as old as Bitcoin?
For real?
What?
It's true? This is the 1.0 wallet?
This is 1.0, yeah.
What? Cardano's been around since 2017.
Yeah, exactly. That's what. Is that how long? Yeah. Okay. They've just it's been 0.15 version, whatever.
Interesting.
I suspect it'll download the full blockchain in no more than 48 hours.
On a 150 gigabit connection.
Yeah.
Wow. It's going to be like the old 56K days downloading a song off Napster.
What I guess I'm saying is that it will actually by Cardano relative to Cardano and Daedalus standards, it will actually work. So under 48 hours to download a full.
That's your prediction for DNFA is under 48 hours. You went really bold on the last prediction, and now you're giving yourself a ton of room.
Mate, this is not bold at all, because I think their 0.15 wallet took something like 48 months to sync up with the blockchain. 48 hours.
Okay, and based on whose download? Like, are you just talking average download time?
Yeah, like an average person with an average,
Where are you measuring this? Are you going to download it?
Yes, I will.
You will?
Yeah,
interesting.
I'll download the upgrade, and I'll see how long it takes for the thing to sync up. And it's just going to be an honor system here, man. You're just going to have to believe me when I say, oops, it took 49. So.
I'm going to say it takes more than 48.
I'm going to tell Charles who said that.
That's my prediction. I think my odds of winning on that are pretty low, but I'll get paid more.
You'd be surprised, man.
Yep.
Sorry, I'm having to go with that wallet, that poor wallet.
I've never tried it.
Haven't you? Oh, it's a debate. It's great. It's a beautiful product. Darren, it was lovely to talk to you again on another episode of the Crypto Radar podcast. This is Sol Paul. That's Nevada Darren, formerly Great White Mall Darren. And we'll see you here again, same time next week. Same time, same place, same bat time, same whatever. I'm getting... This conclusion is absolutely diabolical. I think I'm just going to have to end it here abruptly because I'm butchering this completely.
All right, cool. See you guys.